Let's bring on board our two experts who are joining in today on the show. We've got Jagannathan Guntla, who's the equity head at SMC Capitals. He joins in from New Delhi to talk to us about all the fundamental aspects of your questions. And Kunal Bothra, head of advisory for LKP, joins in on the technicals. Okay, let's take on board all your individual questions first up. And our first query for the day is coming in from Kapil, who's an IT professional. He's got a question for us on ACC.
My first query is for the stock ACC. I have like around 250 shares of ACC at 1203 rupees per share. Bought them 6 months back and wanted to know what would be the future of this stock. Should I just continue holding it or should I cover my losses and sell it off?
Okay, let's start off by helping Kapil out on that query on ACC. And of course, his calculator reveals that he's losing out quite heftily on that. Jagannathan, let's discuss the fundamentals first up. Now, no doubt, we have seen that the cement space has been plagued by quite a few fundamental issues with respect to the enhanced capacities, the demand-supply mismatch. And do you think that it's advisable at this point in time to perhaps increase his time horizon, or do you think it's better for Kapil to book out of this counter?
He got the timing perfectly wrong in the sense that cement stocks had a fantastic rally from 2010, 2011, 2012, almost 3 years. Despite market conditions, cement stocks kept on moving up. But I think he entered the stock absolutely at the fag end of the rally. I think he's paying the price for it. I think it's better to accept his mistake and move on. I don't think his level will be coming very soon. I think it makes sense to move on to, say, stocks like Sesa Sterlite, which is appearing to be rock solid amidst of merger between the Sesa Goa and Sterlite, and top of that cane related all the positive news also benefiting Sesa Sterlite. So all in all, I think it makes sense to move on from ACC to Sesa Sterlite.
That's the call coming in on an ACC exit from that one. In fact, you could look at switching to the metal space and look at a Sesa Sterlite instead of an ACC. And Kunal, clearly it seems like he's bought the stock at very elevated levels. In fact, you have a 52-week high of close to 1366 and his buy price is not too far off from those levels. What should his strategy be from the current levels now?
Definitely move on, Megha. I think the charts are very indicating very clearly that there is a bearish formation, not just on the daily charts but on the weekly and the longer term time frame. So my sense is probably what you're seeing in the cement pack is more of a drag and more of a delay in terms of the price fall. But I sense probably the price fall could happen in the next couple of months or in the next couple of quarters. So from a medium term to longer term perspective, I believe that probably 1200 is a far off price which seems to be very difficult to achieve in the next 6 months to 1 year. I would say move on to a defensive pack, because since the market conditions are a little more volatile, and I think something like Cipla offers a good trading opportunity over here. It's at a price at around 400, 410. My sense is if you're looking at a short-term target of say 10%, I think 440, 445 could be a good target on Cipla if you're looking to enter at current levels. So I would say move on from ACC, and I think Cipla should be an interesting stock for you.
Okay, so Kapil, those were some of the mistakes you made. It is the right stock that you've bought, but perhaps the wrong time and price at which you've bought it. So it's advisable both on the fundamental and the technical perspective that you look to exit the counter at close to 1200 levels and put your money either in a Sesa Sterlite or Cipla as a good defensive play with targets of 440. Hope we got that query answered. Well, Kapil's also got a query on Emphasis. Let's hear out what he has to say.
My next query is for the stock Emphasis. Again, a mid-cap IT stock that I bought when it was again at a very all-time high of 621. I have 100 shares at 621 and again not sure of what should I be doing with this particular stock.
Okay, bought at close to an all-time high, and he's roughly, his investment is halved in value. Jagannathan, on technicals, a lot of people recommend that when stocks making fresh highs, that's a good entry point because it could probably move higher. But in this case, it's certainly not worked out. The fundamentals don't seem to have backed Kapil's move. And in addition to that, management's also indicated that the next couple of quarters would likely remain soft for the company. What do you think Kapil should do now? Should he switch out, keep with the IT space?
I think this is again a classic error because in the case of ACC, at least the stock was good, price was wrong. In case of Emphasis, both are wrong, both in terms of stock as well as price. I think the moment when HP has sort of taken over Emphasis. I think that is probably the end of good times for Emphasis. Now I think it's all in the making that much lower levels will be coming. I think when almost every IT stock has moved 100% in the last 1 year, be it KPIT Cummins, be it Hexaware, be it Mindtree, I think Emphasis was the last stock to be in. I think it makes sense to move on, and probably he can look at Wipro if he's keen on the same sector. Wipro is appearing to be rock solid at least up to 620.
Okay, so if you want to stay in the IT space, that's not the best stock to be. And you heard how Jagannatham talk about how the counter has declined. The counter is nearly half from levels that you bought it at, Kapil. So it's advisable that you put your money instead into a Wipro, a blue chip stock from the same space. Kunal, let's chat about the technicals then. And of course, you had the 1 month chart, the 3 month chart, reflecting very dismal returns for the stock price. What is it that you would advise him? And do you think that mid-cap IT is the place to be, but perhaps another stock?
Yeah, I think probably yes, mid-cap IT, it could be a place to be, but I believe that probably something like Wipro is definitely a better stock, looking at the kind of pure comparison, looking at the frontline stocks like Infosys and TCS and the kind of run-up which these stocks have. Wipro seems to be, some sort of a laggard, but yes, there is a fresh move also on Wipro. So I would say if you're looking at IT pack, I think Wipro is a good stock. But I think talking of Emphasis purely, I think, the stock has been trading in a range for the last, I think, one and a half year, right from 2012 start. It's been on a trading range. So, my sense is that the volume has exhausted for this stock. The volume has dried up. The prices are not moving up further. So, my sense is you should see the stock probably falling down. It makes sense to move on from this stock. I would say something like Bajaj Auto, seems to be probably offering a good trading opportunity. It's trading at, fairly good support levels of 1900 odd levels. So my sense is if you're looking at a trading opportunity, probably 2100 could be a target on Bajaj Auto with a tight stop loss of 1850.
Okay, so that's the call coming in on an Emphasis. Kapil, you unfortunately would likely have to book out of your investment here. Look at a Bajaj Auto in case you want to take a trading play, and Wipro from the IT pack was of course highlighted by Jagannatham. Well, away from the IT pack, let's take on board a question on the pharma segment. Nitin Ahuja is with us and he's got a question on Natco Pharma.
Natco Pharma. 760 rupees I bought 20 quantities. I want to know the fundamental and technical analysis view on those stocks.
Okay, interesting that we're discussing some of the sectors that have certainly been in flavor, at least in the current market rally. That's IT as well as pharma. Natco Pharma is what Nitin has picked, and luckily he's bought it at a good price. He's sitting on a marginal gain, but the question is, can he capitalize on this? So let's start off, Kunal, by talking about the technical trends. Do you think that from the current levels, the stock has the legs to go up even further and reap him better returns than he's already making?
Well, I think one thing which he has to be very careful is that he's bought at a at a higher level. Luckily, that the current market price is higher than his entry price. So the investor is probably enjoying a short-term good time over here, that he's getting good profits. But my sense is you have to be very selective when you enter such stocks. You have to keep your stop losses very tight. I would say probably 750, 745 could be a good stop loss for you. You can hold on to it, but I would say anything around 840, 830 is where you should look to book profits in Natco Pharma.
Okay, those are some of the levels that you could look at booking your money in, Nitin. But on the other hand, if you just look at the 52-week high and lows, it's not a very encouraging picture. The 52-week low is close to sub 400 levels, and Nitin's bought it at 700 plus. Fundamentally, then, Jagannatham, how comfortable are you with his entry point in the stock, especially given what the next couple of quarters could be bringing in?
To do lots of homework in terms of his trading strategy. It seems he is ending up buying almost all the stocks at higher levels. I think there must be, I think his trading style has to be looked into once. I think maybe the stock selection, all this will come later. I think in that sense, probably again, Natco Pharma, just that he was a little lucky that the current price is above his purchase price, and he should thank his stars and book the profit and move on. Maybe if he's again keen on the same sector, Torrent Pharma is appearing to be better.
Okay, so Nitin, the strategy that you've adopted for this one has just happened to work in your favor by luck, but otherwise it's preferable that you don't buy the stock at the higher end of the spectrum and exit the stock at higher levels. That's a word of caution coming in from both our fundamental and our technical expert, and hope we got all of your individual queries answered. Let's not waste any time, get straight to the Portfolio Advisor segment, and today we will be discussing Unmesh Haval's portfolio on the show. Well, let's just quickly take you through his profile. He's 40 years of age. He's in the services sector. He's got 9 stocks all in all with a long-term time horizon. Now, here's what he holds. There's 500 shares of Ashok Leyland at 16 rupees. He's got Ken India close to 50 shares at almost 300 rupees. 200 shares of Hindustan Zinc, that's what he's fetched at 150.2. In the metals basket, there's 50 shares of Hindalco at 114. Mercator is what he's got 200 shares of at 20.9. There's quite a hefty quantity of NHPC, 1700 shares at 20.5, that's his buy point. Rolta once again from the mid-cap basket, 100 shares at 65. There's Suzlon in his portfolio, very tricky one, 25 shares though at 18 rupees. And Titagarh Wagons, 30 shares, and he's fetched it at a level of 381. Well, let's start off by assessing the first 3 stocks then in his portfolio. There's Ashok Leyland, Ken India, as well as Hindustan Zinc. Let's take these 3, Jagannatham, and find out your opinion on the stocks.
If you look at the overall perspective about the portfolio, I feel it is not well-made portfolio for sure. I think there is no much homework. I think most of the stocks I feel that were picked up just on the basis of the rumors or some suggestions, recommendations. No real hard work was really apparent in the stock selection. And of the 3 stocks that you selected, mentioned Ashok Leyland, Ken India, and Hindustan Zinc. I think Ashok Leyland is clear sell, ranked bad underperformer in automobile stocks. But because many of the traders and many of the retail investors tend to get into the stocks like Ashok Leyland just for one point, that their pricing point in terms of the stock is low. That means it is generally available at 16 rupees, 18 rupees. That is the only excitement for which retail investors end up, and then they spend almost years together looking at the price at the same level. I think just move out of Ashok Leyland, and as we just discussed, SSL, it is appearing to be much better. Maybe a target of 260 or 800, 260 to 300 rupees is very much possible on that one. Ken India is appearing to be rock solid, just that buyback is going on. For next 6 months, nothing is going to happen in the stock. After the buyback completion, which is expected to complete in July 2014, the stock can be expected to move to 400. But you should show patience at least up to that point. If you don't have patience, don't expect much to happen in the Ken India for next 6 months or so. Hindustan Zinc is again a classic case. Again, you ended up buying at a very, very high end of the range, 150 rupees. I think now various things are going around, whether will it be merged or will it be delisting, and you have to keep locating for the news flow that is happening around Hindustan Zinc. If you know how to handle the delisting related development, then it's you can hold on. Otherwise, if you want to take it easy, then maybe you can think about Wipro with a target of 620.
Okay, that's a call coming in on the first 3 stocks in the portfolio. Let's talk about the next 3 then. There's a Hindalco, and of course metals have been under pressure, though Unmesh is just about breaking even here. There's a Mercator as well, and an NHPC which has been picked up at about 20.5, Jagannatham.
Again, Hindalco is one of those the very, very slow-moving stocks. I think even when all other metals are just running away, I think Hindalco has been spending here for almost for a very, very long time. If somebody has patience, probably he can hold on. But I think there is a much better way to play the frontline game, frontline large cap themes. I think it makes sense to sell on Hindalco, and maybe he can think about M&M. Mahindra & Mahindra is appearing to be much better play, say with a target of 1200. Again, Mercator is a rank bad underperformance stock. I think he should sell it off. I think he can think about IDFC with a target of 160. And NHPC, again, one of those stocks which can almost, you can look at the same price point for almost throughout your life. I think you can, maybe it's just a dividend play. You can get some dividend now and then. I think barring that, nothing can be expected out of NHPC. So all 3 depends on whether you want to show patience, you hold on to NHPC and Hindalco, otherwise you move on to other stocks.
Okay, and finally, let's move on to the next set of stocks, and it's pure mid-cap play here. There's Rolta, Suzlon, and Titagarh Wagons. Jagannatham, what do the prospects look like for these 3?
I think all 3 are a clear sell. Absolutely doesn't make any sense, be it fundamentally or any other basis. Rolta is a clear underperformer in IT basket. I think he should sell it off. He can think about buying Ambuja. Ambuja is appearing to be under pressure at the current moment. He can buy it, use this dip to enter the stock with a target of 190. Suzlon, again, I think almost numerous retail investors have stuck into that. I think they will remain there for life. I think you sell it off Suzlon also. I think buy Ken India, again, as we discussed, show patience for say 1 year. I think the target of 400 should be reached on Ken India. Titagarh Wagon, a typical railway budget stock. Maybe you use one of these bounces around these railway budgets and sell it off the stock, and then again you can add more on at target of 190.
Okay, Amir, so lots of chops and changes that Jagannatham's recommended to your portfolio. So just let me quickly remind you of them. There's an Ashok Leyland that, of course, you have at present. Exit from that and buy into a Cessa Sterlite. A target of 260 is what you could probably look at. Okay, in India, hold on to that investment then for a target of 400 rupees. Exit from Hindustan Zinc as well. Instead, nibble into a Wipro, which where you could look at a target of 620. Hindalco as well, since you're just about breaking even, exit that. Switch to an M&M instead for a target of 1200 rupees. As far as Mercator Lines is concerned, we'll switch from that to an IDFC for a target of 160 rupees. NHPC is the stock that you can hold on to, and this could probably fetch you close to 30 rupees. Rolta then, well, exit from that, buy into an Ambuja Cement, and same is the call with the Suzlon, where you exit and buy into a Cairn India for a target of 400 rupees. And for a Titagarh Wagons as well, switch from that, you could look at investing into an Ambuja Cement once again for a target of 190 rupees. Kunal, I wanted to just get in a word from you first up on the Nifty, especially in light of the fact that we have a RBI policy meet as well coming up next week. How would you be strategizing on the index now?
Well, I think it's becoming very difficult to trade in this market because, Nifty has been in the range for the last 3 weeks. Start of Jan, I think we entered this trading range of 6240 to 6350 odd levels, and we've maintained that, the sideways movement for the Nifty. At 6350, the momentum seems to be picking up, and there are chances and, expectations that the market could break out. And similarly is on the downside. 6240, 6250 is where, you see that pain in many of these stocks. So my sense is till the time this range does not get broken, it's difficult to probably, guess or anticipate the kind of trend you could witness. I would say next week, if the RBI policy probably moves into favor of the markets and Nifty breaks out of that hurdle of 6350, I think that is a very good opportunity to go long. On the other hand, I think if 6240 gets taken out first half next week, I think there are chances that, you might see a crack of 100 and 150 points on Nifty.
Okay, so yes, we have been confined to a very tight range, so watch out for some of those levels that Kunal mentioned on the index. But Kunal, have you run us through your top trading recommendations then for the coming weeks?
Well, I have two ideas. One is on the buy side and the other is on the sell side. The first buy is a buy on Bajaj Auto, as I recommended earlier on the show. The stock seems to be forming a bullish, pattern over here. The momentum indicators and the volume are showing some very good strength. The candlestick pattern also on the daily charts are, interesting. It's a bullish hammer formation as well on the daily chart. So my sense is the stock should pick up momentum. It's a very tight stop loss on Bajaj Auto around 1880 with a target of 2000. The second is a sell on Aban Offshore. I think the stock, was trading on a very strong note. However, there is a very critical RSI divergence on the daily charts. By RSI divergence, it's a bearish indication that the stock could probably head towards lower levels. It's trading at around 400 odd levels. My sense is it could, come to a level of around 380, which is my target. Stop loss for this is 410.
Okay, those are some of the top technical ideas that you could be focusing at for the week ahead. But Jagannatham, in terms of longer term investment theme, what would you be recommending?
Again, on the 1 year point of view, I think again, as we discussed, two stocks during the program. One is Cairn India, appearing to be a target of 400, and the M&M appearing to be a good for 1200.
Okay, that was one of the ideas. And what is the second recommendation, Jagannatham?
The M&M, again, as we discussed in the program, the 1200 rupee target is possible.
Okay, so that's Cairn India as well as M&M that Jagannatham is advising. You can look at those blue chip stocks for the long term. And of course, on that note, we'd like to thank both Kunal as well as Jagannatham for being with us on this leg of Buy Now, Sell Now weekend.